Temperature is a little bit more bearable. Well, good afternoon. I am Paulo Sotero, the director of the Brazil Institute of the Wilson Center. We are very glad to have you here. We are particularly honored to have with us today to discuss this very timely issue of the global dynamics of biofuels. Three of the foremost experts on the issue from the agricultural side. Professor Wallace Steiner from Purdue University in Indiana. And if you know something about the Wilson Center, you will know that Indiana is a very important state here. Because of obviously our director, Lee Hamilton, is from that part of the woods. Also we have Professor Bruce Babcock from Iowa State University. And if you know something about biofuels, you know what important role Iowa plays in that, besides playing a smaller, an interesting role in U.S. politics, especially of the presidential kind. We have also Marcus Young, who has been leading this research in Brazil on this field, again from the agricultural side. He is from the University of São Paulo and also the president of ICONE, which is a center for the study of foreign trade negotiations. Having this seminar is an idea that Marcus and I started talking about last October, and since we have the capacity to predict the future at the Wilson Center, we obviously knew that President Bush was visiting Brazil on 8th of March, and that President Lula was visiting the United States back on March 31st, even before they knew that. So this is, but it's a very interesting, fortunate coincidence that this subject has now a political momentum to it, and it's that for that reason that we invited also, and we are very happy that they accepted our invitation, two experts from the official side, Gregory Manuel, who is the special advisor on energy for Secretary Rice at the State Department, and Emerson Claus, who has worked on this field, in this field of energy, biofuels, ethanol, in the Brazilian Ministry of Foreign Affairs, and also continues to do the work here at the embassy. The way we are going to do this is that Professor Steiner, who has another commitment for later on, will go first. He will talk about the policy side of this issue, about that, and then we will continue with Professor Babcock and Professor Young, and then we will have Greg and Emerson commenting. This event is being webcast, so if you know someone that would like to know what happens here, you can give them the address. It's on our site. It will be on our site. And with that, I would like to start. Professor Steiner.
Okay, as Paulo indicated, my role is to talk about energy and ethanol policy alternatives. The policy alternatives that the United States or the European Union or Brazil follow have implications certainly for those countries, but also far beyond their borders. So the policy, when the United States, for example, adopts a policy to stimulate production of ethanol, and that in turn stimulates the construction of plants and the demand for corn, and that in turn increases the price of corn. That price is not just a U.S. price, that price is a world price for corn. So it has implications far beyond our borders. So what I'm going to try to do very quickly is to go through some policy alternatives for the future of development of an industry for renewable fuels from agriculture. Until very recently in the United States, the ethanol production was not economic without a subsidy. We've been subsidizing ethanol since 1978. Until very, very recently, that subsidy was required in order for ethanol to be produced commercially. And when that subsidy came into place at $25 or $30 oil or less, it was something that was required for break even, but with $60 or $70 oil, ethanol has become very profitable. In addition, there are some states that have subsidies, so ethanol has been growing very quickly. In this slide, you can see where we were 6 months ago and where we are today. And you can see how quickly things can change. The X here shows what was the market condition in July of 2006 when ethanol was about 3 1/4 a gallon and corn was about $2.40 a bushel. And the blue line is the break-even line between ethanol and corn prices. So you can see that there was a huge profit, $1.60 or more profit per gallon of ethanol produced. And throughout much of 2006, the returns were so high in ethanol that if you could have produced a plant instantly, you could have paid it back in less than a year. And so you can see how strong the incentive was to build ethanol production. Look at it another way and come across the X to the break-even line, and you can see how high the corn price could have gone, $8 a bushel, if this condition had continued. But it didn't. And now we're closer to that blue line. In January of this year, ethanol was around $2 a gallon and corn around $4 a bushel. So corn almost doubled and ethanol fell substantially, and we've fallen to something closer to break even. And what we're seeing then in the market is that plans for new plants are being postponed or canceled. Not the plans that are under construction are continuing, but the new ones are slowing down considerably. This slide shows the huge growth in ethanol production in recent years. It went along pretty flat during all that period of cheap oil, and then is shooting up. It'll be about 8 billion gallons this year, and it'll be about 11 billion gallons next year. And it'll continue to grow a little bit beyond that, most all of which is from corn. This graph is another break-even graph that shows the break-even on a different basis, the basis between crude oil and corn. And the three lines are three different ways to look at it. The yellow line at the top is on an energy basis, energy equivalent basis. I won't focus on that one. I'll focus on the green and the blue. The green line adds a premium to the ethanol price based on its value as an octane enhancer. It has 112 octane compared to 87 for regular gasoline. And also its value because it adds oxygen to gasoline, has more oxygen by weight than gasoline does, and helps the gasoline burn cleaner. So this assumes a 25 cents a gallon premium for those additive values. Then the blue line adds to that the current U.S. federal subsidy for ethanol of 51 cents a gallon. So if we come across the $60 crude line to the green line, we get, without any government intervention, a break-even price for corn of just a little above $3 a bushel. But if you add the federal subsidy and come across that $60 line, you get a break-even price of about $4.80 a bushel. Corn, I didn't look this morning, but corn near futures yesterday were $4.30 a bushel. And oil's a little bit less than $60. So you can see we're getting close to, and these break-even lines all include full capital recovery. So that's the current situation, is that the demand for corn, the added demand for corn for ethanol is pulling up the corn price substantially. And I think Bruce is going to talk after me about what the implications of this are for the whole sector and even globally. I'm just going to talk about the policy alternatives. Their alternatives are, one, to stay with the course, do what we're doing, continue doing that. Second, if we're concerned about these higher corn prices and their implications for livestock cost, poultry, pork, even beef, we could think about reducing that subsidy, keeping the current system in place, just reduce the amount. Third, we could consider a variable subsidy, one that varies with the price of crude oil, so the subsidy is higher when crude is cheap and even goes away when crude is expensive. We could also look at the alternative fuel standard, something like the President introduced in the State of the Union message. We could look at a combination of the alternative fuel standard and a variable subsidy. And finally, we could look at special incentives for cellulose-based ethanol that we hope will come into play down the road. We pretty much know domestically what would happen if we stay with the current subsidy. It'll continue to grow until corn price chokes off profitability, and then it'll stop. We know that there'll be some food cost increases due to the higher corn prices. The global impacts are harder to estimate. The World Bank says that 70% of the world's poor live in rural areas in developing countries and get their primary livelihood from agriculture. So on first brush, you might say, okay, that means the commodity prices, the things they produce, are going to be higher, so they'll be better off. But a lot of those folks are landless. A lot of them are net food buyers. So it's very complex. We're working on that topic, but anybody that tells you they know the global impacts on poverty of this, I think, is not correct. This is the picture of what happens if you just lower the ethanol subsidy. I used an example here of 30 cents a gallon. And you can see, if you come across the $60 line, that this would, $60 crude line, that this would bring corn down to about where it is now. About $4 a bushel would be the max that could be supported. The disadvantage of sticking with the fixed subsidy is that when crude is cheap, it's not enough to keep the industry going. When crude's expensive, it still provides a subsidy when it's not needed. But it certainly is an option that is being considered. The variable subsidy is another one, sometimes called a price floor. And in this one, you have to decide two things. You've got to decide where you're going to begin the subsidy, at what price of crude you're going to begin it, and how fast it grows as crude falls below that price. For this illustration, and it's nothing more than that, I've assumed a $60 beginning point and 2.5 cents per dollar crude falls below $60. So if crude is $50, the subsidy is 25 cents. If crude is $40, the subsidy is 50 cents, about what it is now. The variable subsidy looks like something like this. For any price above $60, there's no subsidy, so it's purely driven by market forces. And for any price below $60, there's a subsidy. The max corn price that could be supported roughly here is about $3.10 a bushel. So that's above the point at which farmers receive subsidies in the United States, but and certainly higher than historic corn prices, but nothing like the $4 to $5 range that we're in now. And yet if crude falls to $30 or $40, there's a safety net there for the ethanol producers. Another option is the alternative fuel standard. President Bush proposed this. He proposed a 35 billion gallon alternative fuel standard by 2017. Our current ethanol production is about 5.3 billion gallons, so this is roughly 7 times that in 10 years. And they estimate that this would replace 15% of the projected 2017 gasoline consumption. The interesting thing about a standard or a mandate, they mean the same thing, is that it's no longer necessary to subsidize alternative fuels. You can, but it's not necessary to subsidize them if you have a standard in effect. The main difference is how it's administered. With a standard or a mandate, when crude oil prices are high and the alternative is cheap, then there's no cost to anyone. But on the other hand, if crude oil is cheap and the alternatives are expensive, then with a standard, the companies have to go out and buy that alternative at whatever the market price is, which is going to be higher than its cost of production, or at least as high as, and therefore the consumer faces a higher price at the pump than they would in the absence of that standard. It's hard to illustrate the standard when there's so many variables running around. The spreadsheet that this slide comes from has over 400 numbers in it. So I decided just to pick some points just to illustrate it. And in this case, the horizontal axis has the cost of producing the alternative fuel. If you look at cellulose-based ethanol today, that cost is way up here. And then I've run this at $50 crude and $70 crude. And so the horizontal axis gives the percentage change consumers see at the pump given those assumptions. So if crude is in the $50 to $70 range and the alternative is cheap, consumers see hardly any change at the pump. But if crude is in the 50 to 70 range and the alternatives don't get cheaper, then consumers would see fairly substantial changes at the pump. But there would be no federal government outlay. Today, this year, the government is going to spend $4 billion subsidizing the 8 billion gallons of ethanol that's produced. Next year, they'll spend 5.5 billion gallons. Under the standard, the cost is borne directly by consumers. An ironclad standard is necessary to induce the private sector to invest. The private sector is not going to invest if they perceive that the standard is sort of like a target or the standard is like a suggestion, because they face the risk of technological uncertainty with cellulose conversion. They face the risk of oil price uncertainty in the world market. So if they perceive the standard as just something like a suggestion, they're not going to do it. And the risk that a politician runs with an ironclad standard is that consumers might be in the situation of seeing prices at the pump that are high when prices in the oil market are low. And the consumer might not like that. And so another option that's being considered is a standard that has an add-on variable subsidy that starts at fairly low crude oil levels. So it's a standard, except that, say, at $45, the government comes in and begins to subsidize the alternatives. So instead of putting it all on the consumer at the pump, part of it goes on the consumer at the pump, and then starting at $45, some of it is credited directly to the alternative energy producers through a government subsidy. So it's sort of like a sharing of the risk of very low oil prices in the future. And so this is one that perhaps is politically more interesting because it combines in a way the best features of a variable subsidy and an alternative fuel standard. One of the big problems that we have in the United States with alternative fuels is how do we do the policy transition from corn towards cellulose when cellulose today is so expensive, much more expensive, as a source for ethanol than corn is. Investors, so long as it's attractive, they're going to continue to invest in corn until the corn price rises so high that it chokes that investment off. Yet all the politicians talk about the future being cellulose-based, switchgrass, miscanthus, poplar trees, wood waste, etc. So how do we get there? Well, one way is to provide incentives directly for cellulose ethanol. One of those, and there are many of them, we're looking at a whole wide range of them, but one of them is something called a reverse auction, where the government says, we want 100 million gallons of cellulose-based ethanol for the next 10 or 15 years. We're willing to buy it. And everyone in this room would then have to bid on the right to produce that 100 million gallons and sell it to the government. And the lowest bidder wins the contract and gets the right to produce that. You do a few of these and you get the technology introduced, you get the industry moving, and the hope would be that beyond that point then the private sector would be able to take it over on their own. So let me just summarize the policy impacts of these alternatives that I've talked about so far. They can lead to very corn prices. High corn prices. We already see that. It's, of course, beneficial to corn farmers, but not to livestock producers or consumers. The subsidy cost for ethanol this year is going to be $4 billion, but the Congressional Budget Office estimates that the amount we spend on farm subsidies is going to go down $4 billion this year. So at the current state, it's sort of a wash, but for all future years, the ethanol subsidy will cost more than the farm subsidies would have cost. And if we continue on this current path, it's possible that we will see political opposition. The ag sector is beginning to be divided. 2 weeks ago, in their national convention, the beef producers passed a resolution recommending the phase-out of ethanol subsidies. In my home state of Indiana, there's a group called Indiana Poultry Producers Against Ethanol. So the political opposition, or the potential of it, is quite real, and we probably should be, and we are, examining some of these alternatives to the current system that doesn't vary at all the level of the subsidy with the price of crude oil. Final point I'll make, and I'll run through this quickly, is the link between renewable fuels and climate change policy. You probably know that about 3 weeks ago there were 10 U.S. companies. I first used this slide in Indiana, so I listed the ones that have strong Indiana roots, that have joined with environmental groups, basically coming to the government and saying, please regulate us. Now that's kind of strange, kind of rare for companies, private sector companies, to go to the government and say, you need to regulate us. And basically what they were saying is global warming is real. You can feel it right here. And we need an efficient and consistent national policy to deal with it. And what they recommended is something called cap and trade, where there's a cap put on CO2 equivalent emissions, and over time that is reduced. And companies can meet their cap by doing technologies on their own that emit less greenhouse gas emissions, or by buying that from other companies that can do it at lower cost. Renewable fuels would benefit from this because some of the environmental advantages of renewable fuels would then have a market value that would be priced directly into those fuels. So the bottom line is that right now I think we're in a demand-driven oil price scenario, particularly driven by the emerging countries, China and India and others. But don't ever believe that oil prices will always be high. If there's a global recession, we'll see significant oil price drops, and that risk is a real deterrent to investment in alternative energies. So we've got to develop policy pathways that will lead us towards alternative energy, but at the same time lower greenhouse gas emissions, and the choices we make there, I think, will be absolutely critical. Thank you.
Since Professor Tyner has to leave us, cannot stay to the end, he agreed to answer a couple of questions. If you would have someone would want to ask him specific about his presentation. Oh, there is one. Could you wait for the mic, sir, please? Kristen is going to do us a favor.
Thank you. Your presentation would suggest that the price of corn is quite keenly affected by demand, but how about on the production side? How much room is there, at reasonable cost, for an expansion of corn production in the United States in a way which would help resolve some of this demand-driven price increase that is a problem for the agricultural commodity sector?
Bruce, you're going to cover this in your talk. Bruce is going to cover this, and he's going to cover it in much greater detail than I would, so I'll just let him answer. If he doesn't give the complete answer, then come back. But any other questions?
Hi, I'm curious towards what kind of assumptions were made in terms of cost of production. The plants, I mean, the plants, the ethanol plants have suffered like just doubling of cost to build. So what did you use in assumptions on the models that you built. I'd be very curious. And second, in the environmental question that you lay out in the end, even with the cap and trade, but what assumptions are you making regarding corn ethanol and environmental sustainability?
Okay, two good questions. All the assumptions that we've made are in the paper that's on this website, but the quick answer to your question is $1.80 capital cost, up 80% from a year ago, and all of the numbers that we pulled from the market as of November of 2006 when we did this analysis. So it's fairly current in terms of capital and operating cost. We also built a link between corn price and DDGS price so that as corn goes up or down, the distiller's dried grain byproduct also goes up or down. And we built a link between crude and gasoline and ethanol. And all that is detailed in the report that's on this website. The second question is we haven't done the analysis on the cap and trade system, but I think what you're referring to is corn-based ethanol doesn't have a strong greenhouse gas gain, and that's correct. Cellulose ethanol is projected to have a much higher gain. It's likely to happen, but it's not there yet.
Sure. Two more, and that will be.
Have you looked at how much capital expenditure in railroad infrastructure would be necessary to keep up with the growing production?
Another excellent question. We have a grant from the state of Indiana to look not only at railroads but highways and rail and barge, because what happens is the whole system, even state of Iowa, is some people are predicting to be a net corn importer, and Indiana could possibly be that. So all the corn that was flowing down to the river to get on the barge to go down the Mississippi is now going to be flowing to ethanol plants. The alcohol is then going to be going by rail or truck. Huge infrastructure changes, absolutely huge. We don't have answers, but we have money to get them for the state of Indiana.
One final one, I think I saw, yes.
What is the percentage of the cost to produce ethanol related to the cost of the feedstock itself?
It's a high portion of it. I don't remember off the top of my head, but it's probably close to 70%. It's a high part.
Now, will that cost go down if you have a better technology in place?
You're not going to change the corn technology that much. Right now we're getting 2.7 gallons per bushel. Some people are predicting 2.8, maybe 2.9. Monsanto is saying they can breed a corn that has more starch. If they can, then we could get higher yields. But the real gains that are possible, not necessarily, certainly not there, are on the cellulose side. People are projecting that we can double or triple the yields that are possible today from cellulose. But we're not going to get that much more from the corn.
Thank you.
Thank you very much, Professor. And so we will move now to the second presentation by Professor Babcock from Iowa State University.
Thanks. You notice my affiliation there is the Center for Agricultural and Rural Development at Iowa State. My research center there is kind of charged with keeping track of things that affect U.S. and world agriculture, so we naturally have invested time and human resources into better understanding what impact will expanded U.S. Biofuels production in general, but more specifically ethanol production, what impact will that have on the U.S. agriculture and on world agriculture? And really the piece of the kind of puzzle that we're trying to get at is a piece of a larger puzzle that I think policymakers in Congress, administration, and other countries around the world really need to ask themselves if it really makes sense to go down this biofuels path. Because some of the considerations that they should be talking about are, there's a bunch of them. There's trade-offs involved as we go into more biofuels. I listed a couple of them here. A very minor one that I listed first, but it's probably the most minor, is really a change in the distribution of profits within agriculture. I mean, some countries are winners, some are losers. Some industries, livestock is probably a loser. Crops are winners. And so there's winners and losers even within agriculture. What about changes in food costs? Not only in rich countries but in poor countries. What about any change in environmental costs? Are there benefits or are there only costs involved in more biofuels? What about the change in the consumer expenditures on gasoline, fuel? What about some of those issues? And then less quantifiable are what about any kind of change in national security or foreign relations or those kinds of considerations. So there's a whole menu of things that we should be thinking about before we adopt policies that lead us down towards more biofuels. And I think this seminar today is part of that, and our future cooperation between Brazil, we hope, between Brazil, the EU, and the United States in terms of the research can help provide some insights into those questions. Okay, so what I want to do is talk a little bit about, what do we think is going to happen within agriculture as we go down and produce more ethanol in the United States? Now, you got to remember, I'm from Iowa, so my first thing is make sure everyone knows where Iowa is. It's not Idaho. It's not Ohio. It's one of those dark blue states. It's the dark blue state right in the middle of the country. Now, that dark blue means what I've done here is I've mapped out where corn surplus is, and this was in 2004. So corn surplus is the amount of corn produced minus the amount fed the livestock, minus the amount put into ethanol in 2004, minus the amount processed. So dark blue means there's a whole lot of surplus, and that goes to other states and it goes to other countries. And so Iowa was second in surplus to Illinois. And so naturally, right there for some reason though, Iowa was the place where almost all the new ethanol plants went. Iowa, Nebraska, and Minnesota, and in South Dakota too. So that's where Ethanol Central is right there in Iowa. So we have a lot of ethanol companies and right around where we are. So that's Iowa, and that's where the ethanol industry is. Okay, so what did we do to come up with the projections I'm about ready to show you? Well, we try to keep track of all the plants, current ethanol plants that are operating and plants that are under construction, and we take that as a given that that's going to is going to determine how much ethanol we're going to produce up until 2009. Okay, so the train's left the station, if you will, and it's almost an inevitable that we are going to have these plants constructed. So we have a pretty good idea of where we're headed. Then what we do is we use economic models, economic logic, to figure out, okay, well, is there an incentive to expand further, or are these plants going to keep operating, or is there going to be a margin to keep them operating, and try to get an idea of how much ethanol we actually are going to be producing to 2016. And then what we want to do is basically look at the impact of that increased U.S. ethanol on the rest of the world and on U.S. agriculture. So it's a big task. But we had a series of international and domestic models of world agriculture, livestock, about 50 or 60 countries that we model. And so what we are what we're doing is modifying all those models to enable us to answer that question about what is it going to look like out there as we run U.S. ethanol high. Now in the economics trade literature, there's something called a large country assumption and a small country assumption. Now, the small country assumption, when you make it, says whatever happens in this country is not going to have any impact beyond its borders. It's too small a market. It's too small to affect world markets. In the United States is a large country. So it's a large country assumption. Whatever we do in the United States in agriculture just about affects world markets. And so when we run up ethanol production, we're going to affect world agriculture. There's not a doubt. We've had an effect on world agriculture. So what we want to do is make sure we can understand what's going to go on. So the key determinants of what's going to happen is what's going to happen to crude oil prices. Well, if anyone knows that, they can, number one, get rich by taking a position on the futures, but I don't see a lot of people out there taking positions on the futures, so probably not. There's hardly anybody out there actually knows what's going to go on with crude oil prices. But that's a key determinant. So really our results are real sensitive to what we assume about crude oil prices. In this study, we're using the New York Mercantile Exchange futures prices as our guide. And they've changed a lot too, so what we're doing is it's about as of 2 weeks ago. Our policy incentives, that's the other key driver. So the two key drivers here are the crude oil prices and what are we doing about policy in the United States. So basically the policy that we have is just keeping the same key policies that we have, which are the primary one is a 51 cent a gallon ethanol blender's credit. That's a domestic subsidy for use of ethanol, and we keep the import tariff in place. Another key driver is what's going to happen if we saturate our market in a 10% ethanol blend? What do I mean by that? Right now we consume about 140 billion gallons of gasoline for fuel in the United States. So if we were to make each gallon of gasoline sold consist of 90% gasoline, 10% ethanol, then we would essentially consume about 14 billion gallons of ethanol. And I think that's probably feasible given the current infrastructure with some added infrastructure investments like we talked about, like what the question, earlier question was. But what happens if we want to go beyond 10% blend? The president essentially had in mind 25 or 30 billion gallons of gasoline. Well, then you have to have some kind of way of consuming that, I'm sorry, not of gasoline, of ethanol. We have to have some way of consuming that amount of ethanol above a 10% blend. The problem is that automobile manufacturers in the United States don't produce a lot of flex fuel cars, and if it's not a flex fuel cars, they don't warrant that the car is not going to break down if you go beyond a 10% blend. So there's a huge public policy and infrastructure questions that have to be addressed if we're going to go beyond a 10% blend in this country. So what we did is we assumed that if there's enough economic incentive for people to invest in flex fuel vehicles, they will. Now, how do you get people to want to invest in flex fuel vehicles? What you do is you make it cheap. You drive the price of ethanol below the equivalent price of gasoline so that when they go fill up, they're better off. So that's essentially how we're dealing with that. So that's in our model there. Okay, so there's our crude oil price assumption. And basically that's the NYMEX prices, and we extend NYMEX out 2012 using DOE's some projections by DOE. But basically we're at about $57 imported crude price. So if you look at where the history was, look at that blue line, because that's the equivalent price we're using. You can see that the dark blue line below, we were at $30 for a long time, and that shot up to almost $70 in last summer, and now it's back down to about $50 to $60, and that's right where we're assuming markets are going to settle. We don't know if they're going to settle there for certain, but using the futures markets as our guide, that's what we're assuming for the projections that I'm about ready to show you. So here's our projected gasoline and ethanol prices. You can see the kind of maroon or purple or, I don't know, what color is that? Purple? Pink? How about pink? Dark pink? Okay. Huh? Magenta. Okay, thank you. I knew there were some English majors in here that are very well spoken. The magenta line up there is the ethanol price. You can see that it was very high in 2006, way higher than the equivalent gasoline price. And the reason for that is we switched out of MTBE and went into ethanol as a replacement. The demand shock was just tremendous, and that really increased the price of ethanol. That made the margins for ethanol, the profitability. If you owned an ethanol plant operating in that time, you were very lucky. However, most ethanol plants weren't operating in that time, so most aren't that lucky. And then we're seeing that as we move beyond the MTBE and move into needing to price ethanol competitively to get it into the 10% blend in the United States, that price has to drop below the price of gasoline, and so we're going to see ethanol prices quite a bit below. that. You can see the Brazilian price of ethanol that we make in our projection. We have a Brazilian ethanol model out of sugarcane, and we're looking at a relationship between that, crude oil, and sugar prices that determine a kind of equilibrium price. And that's below the U.S. price for ethanol on a dollar per gallon basis. And that's partly because, however, there's still enough, the wedge is much smaller than the 54 cent a gallon import tariff, so we don't see a lot of imports coming into the United States. However, you saw in 2006, look at the wedge between U.S. prices and Brazilian prices. That's greater than that import tariff, so you saw some Brazilian ethanol flowing in, paying the tariff and flowing into the United States, primarily, I guess, California to meet their, to get rid of MTBE. So here's our projections of the ethanol profitability. As you can see, the magenta line now is the lower line, and that's the return over total cost of production. Okay? The blue line is the return over variable cost of production. So these have two different economic interpretations. If the return over variable cost of production goes to negative, goes to 0 or below, that means the ethanol plant should shut down. That is, it's not covering their cost of producing ethanol. However, if that line is above 0, they should keep going as hard as they could at 100% capacity. The magenta line, if it goes below 0, that means it's not capturing or returning all its fixed costs, its construction costs, plus its variable costs. That means if that line goes negative, we shouldn't invest in any more ethanol plants in the United States. As you can see, that number we're projecting to go negative, about 0 in 07, negative in 08. That is, we would be surprised to see many more ethanol plants start construction in 07 and 08. That doesn't mean there's not going to be a lot of ethanol, because we have a whole lot of ethanol plants being constructed and coming online really quickly. So this is our projection of the ethanol plants, the production from corn that we're going to get. Now, we're currently at about 5 billion gallons of ethanol, which puts us about on par with what Brazil is producing right now. We're projecting that to almost triple. That's a phenomenal growth. Hasn't happened yet. Will it happen? We think it will happen. And so it's going to take a whole lot more corn to feed all that ethanol plant. So that's how many more corn acres we're projecting to go. So we were at, in 2006, about 78 million acres of corn. We're projecting that to go to about 93 million acres. So if you divide, that's 15 million acre increase. So 15 divided by 78, I'm not very good at arithmetic, but that's got to be 20% increase in corn acres. And that's a huge, that's unprecedented increase. Just about. I mean, this is a revolution. Now, farmers aren't going to plant that corn acres just because these ethanol plants are out there running and they need the corn. Those corn acres are going to have to be purchased by the market, which means that the price of corn has got to go up. So here's our projection of the price of corn. Now, I could have put 2005 price down. If I would have put the 2005 price down, you would have seen the corn price right around $2. 05 was $2. We're now projecting up to $3.40. So if you're a feeder of hogs, okay, so you got to buy corn to feed your hogs, and feed costs are 50% of the cost of production, and you mainly feed corn, and you went from $2 to $3.40. You can see your cost of production is going to go up by 30 to 40%. I mean, it's a big change. Now, this isn't only happening to the Iowa hog producer. It's also every other hog producer in the United States, every hog producer in Canada, Mexico, and around the world. Because when U.S. corn prices go up, the whole feed grain complex goes up with it. So every livestock producer around the world, with the exception of grass-fed beef, I think, in Uruguay. I think that's the, and a little bit in Argentina, but Uruguay is certified, basically certified feed-free, feed grain-free in some sense. But grass-fed agriculture, in some sense, livestock is going to have a competitive advantage in this world of high feed grain prices. So where's that corn acre going to come from? It's going to come from soybeans. Soybean acreage is going to come down. So the question is, do we have the capacity to increase corn acreage? Yeah, we just take it from soybeans. It's not that hard of a situation. Before in the past, the U.S. farm policy paid farmers to plant corn. So they planted a lot of corn. They didn't plant much soybean. So a lot of Illinois corn farmers planted continuous corn. Iowa corn farmers were more corn, soybean, 2 acres of corn, 1 acre of bean. It depends on prices. So if prices get high enough, you see the whole corn belt switch to continuous corn if you want. So is the acreage there? Yeah, it sure is there, but it's going to come out of soybeans. So you can see the trade-off that we're projecting: higher corn, lower soybeans, and also some conservation reserve program land will come into corn production. Let me move on here. What happens though is that those acres aren't going to switch without a fight. Now, what we say, these acres fight it out in the market, so we're going to see soybean prices rise tremendously. If I would have put down 2005, you would have seen about a $5.50 price there, going up to, we're projecting about $7.20. Now, the relative increase for soybeans is less than for corn, so the market will signal more corn, but it's still signaling, it's holding in a lot of soybean acres. Now, if I was a producer in a country that produced a whole lot of soybeans, was really good at producing soybeans, had market for soybeans, I would suggest that this would mean more soybean acres in those countries. So let me go there first. So since we're on Brazil, if we think about where those soybean acres are going to come from, well, the first thing you think about is who can produce soybeans. Well, Brazil and Argentina can produce a whole lot of soybeans. I want you to focus on this chart. If you would have asked me and everyone else in 2004, what's the trajectory for Brazil and Argentina soybeans, it would have kept going up, because it had been kept going up forever. But they ran into problems, economic problems and disease problems in Argentina and Brazil. And the biggest solution for production problems of disease and economics is what? High prices. Well, that's exactly what we're getting. We think that high soybean prices will allow Brazil and Argentina to correct some of the production problems they had by affording more fungicides, for example, by having just a higher price to invest in more soybeans. So the world better hope that this picture is true, because if this picture isn't true, then soybean prices and corn prices and biofuel production is going to be very much a bigger problem. Let me keep going. So what I did here is I kind of mapped the annual projected changes, and you can see just about what we're anticipating is about a 1-for-1 trade-off between fewer soybean acres in the United States. That's the sharp magenta drop. It's the annual change. And then more soybean acres in Brazil and Argentina. And so we can see that the world is going to respond in this way. There was a question. Is Iowa going to have any corn left over to export? Here's our projection. You saw that corn deficit? Here's the corn deficit in 2004 and 2009. Look at Iowa, number 2. We're still a net exporter of corn, but not by much. We put in a lot of ethanol plants, and they're going to suck it up. Illinois is still the biggest. Is going to be still the biggest surplus corn state. Okay, I'm supposed to end here pretty quick, right? So let's kind of wrap up. But one thing I wanted to talk about is what we want to do with that baseline model that we have is basically run some scenarios. And what I mean by scenarios, we want to do what if. What if we have a change in technology? What if we have a change of policy? What if we have a change of climate? Or what if we have a change in crude oil prices? What we want to do is be able to measure those changes and make a judgment as to what will happen if we change one of the baseline assumptions that we have. And we're going to measure those changes relative to the baseline. Here's some possible scenarios. What if the ethanol boom never happened? You see the U.S. livestock industry just complaining bitterly about high feed costs. Well, what would happen if they didn't have to pay high feed costs? What is the difference in their fortunes with high feed costs versus low feed costs? What if Congress passes a higher renewable fuel standard? What if corn yields increase dramatically? Monsanto says they're going to increase corn yields at much higher than trend rates. I don't know. What if we got rid of the ethanol subsidy? So these are the kinds of things that we want to answer. So I want to just show about one chart here is our first scenario is, what if we have crude oil prices go up by $10? How will the picture change? So remember, I was at 14 billion gallons of ethanol for U.S. That is, there wasn't the incentive to invest in more ethanol plants in the United States just because of crude oil prices. So if you think about the higher crude oil prices, what will happen? The first thing is going to be that the operating margins are going to go positive, from negative to positive. That's going to create an incentive for more ethanol capacity. So we're going to get more ethanol plants. then we're going to have to price that ethanol lower in order to get people to drive flex fuel cars. So we're going to have to drive that ethanol price down lower. That drop in ethanol price will induce flex fuel cars in the United States. And eventually there's going to be a new equilibrium reached where there's no incentive to grow or exit the ethanol industry, no incentive to invest in more flex fuel cars, and all livestock margins return to normal levels. What I mean by that is if we take more corn out of the market, we're going to jump the feed grain prices up higher. Livestock profitability is going to go down. Livestock prices have got to go up in order to cover that increased cost of production. If it doesn't go up, they'll go out of business and we won't have it. And then it'll go up. That's how the livestock prices go up, is people cut back on livestock production. So we think that this idea we're going to run out of food or anything, it's just going to be higher priced food. Okay, so here's the impact of a $10 increase in the price of crude. Our corn acreage goes up by about 10%. Our corn price goes up by 20%. So we were at $3.40, add 20% onto that. What's that? That's about $4 corn. Ethanol production goes up by 60%. That is, the ethanol production, in the way we're modeling it, is very responsive to the price of ethanol, which makes sense. And so corn fed goes down, our exports go down, soybean acres go down, soybean price goes up. I'm just reading across. Our distillers grain price goes up. The amount of distillers grains we have is tremendously large. In fact, we saturate the U.S. market in distillers grain. We start exporting it. But at $4 corn, the world is going to, livestock feeders are going to be demanding energy to feed their livestock. So I think they will gladly import distillers grains. And here's some food price. Our retail egg prices would go up about 7%. Retail pork prices by about 2%. Retail broiler prices by about 1%. So modest increases in the price of meat. And so last little comment about feed versus fuel. I couldn't resist this last slide. We're in a world where feed prices are going to be higher. Livestock margins, when you feed livestock, your margins are going to shrink. Now we've seen this in the past. If livestock feeders think that this price increase is going to be temporary, they'll hold on. Lower margins today, and if they think it's temporary, what they'll do is just, they won't make adjustments in their production. But if they think this is permanent, they're going to cut production, and they're going to raise prices. So is this permanent or is this temporary? Well, that's a judgment the livestock industry has to make. I think most of them think this is a permanent change, so we should see livestock prices rise pretty shortly. Quickest for poultry, because they have the lowest the quickest biological cycle. Next for hogs, and last for beef cattle. And dairy will be very quick too, we think. So meat and dairy prices will rise. Will consumers feel pinched? Well, let's think about that. 40% of U.S. food expenditure spent on products that are directly impacted by feed grain prices. 60% aren't. If cost of raising these products increase by 25%, and there's a 25% farm gate to retail price ratio, then food expenditures will increase by about 2.5%. At 10%, if we spend 10% of our disposable income on food, that ratio will rise to 10.25%. A minor inconvenience, if you will. And I hate to say that when there's livestock people here that are saying that, the consumers are going to really feel it. I don't know if the U.S. consumers are really going to feel that kind of a change in consumer prices. But that's a basic trade-off that people are going to have to make about higher food prices for what benefits there are from biofuels. So anyway, future analysis we want to do, as I said, we want to cooperate closely. Our numbers here are only good as our knowledge is. So we hope to cooperate with South America and understand better how their biofuels production is working. We'll hear more about that next. But also Europe has a very large biofuels effort underway to try to meet their Kyoto targets. We really want to cooperate with them and understand how's that going to work out. Because we want to be able to address these policy questions in a meaningful fashion. So the only way we do that is if our models are decent. Thanks.
Thank you very much, Professor. I wanted to recognize one person in the room, the lady that identified the name of that caller, Cindy Arson, the director of the Latin American program. The Brazil Institute is part of that. And I would like to inform you also that the name of that caller in Portuguese is Lilas. And it's a very important color, especially during Carnival, because it's very much in use in Rio and other places. Now we move on to Marcos Young, who will give us the Brazilian side of the biofuels and especially of the ethanol.
Thank you very much for this invitation, Paulo. I came to the States to understand what would be the perspectives for the Brazilian sugarcane industry, and I learned from Professor Bubcock that our big perspectives are on soybeans and not exactly on ethanol. But let me talk a little bit about what we are going to do and what's my presentation here. The first idea of this meeting is to put together people, research people working on biofuels, especially in South America and especially in Brazil. You probably know that Brazil has one of the oldest programs in the world. It's 33 years experience on ethanol from sugarcane. And we also had different phases, stops and goes, and I'll talk a little bit about that. And then the U.S. with the new perspectives now, which are quite important. As Professor Babcock showed, it's probably the biggest revolution in agriculture in the last 20 years. I've been working there for the last 4 years on trade policy issues. This is nothing compared to what will happen in biofuels right now. Well, the impacts of the biofuels on the food, on the agricultural markets are probably much stronger than anything we could imagine on the Doha Round or in any other trade agreement. And also Europe, I think it's very interesting to incorporate also people, research people there, and try to understand the long-term issues. Because if the U.S. is moving in this direction, as it was shown, and if we are also seeing big investments in Brazil, I will show you that. The first thing that the economic agents need is to have an idea on what will happen in 10 years. And if these investments will be profitable and what will happen to agricultural prices. So this is the first idea of our cooperation in the next years, and we hope that this project will do that. This idea of cooperating research organizations in Brazil, in US, and in Europe. So my presentation will focus in 4 items. The whole story of biofuels, you already know about that, but I will give you some introduction, figures, and then the ethanol production and markets in the world, the Brazilian fuel ethanol experience, and the question of what type of Brazil-US partnership can be built in this scenario. So biofuels today is very small portion of the fuels market. Here you have the petroleum markets, and then petroleum becomes gasoline, diesel, gas, and kerosene, and you have the ethanol and the biodiesel part compared to what's gasoline and what's diesel. If we look the amount of energy produced by biofuels, it's around or less than 1% of the total fuels market, which is really very small. So if biofuels increase in the energy in the fuels market, the impacts are still very small. But if biofuels increase and we look at the agricultural side, then impacts are quite strong. And we saw that in the corn prices in the late year. We are seeing that on soy prices. We are seeing that on vegetable oils. We are seeing that on sugarcane and many other products. What are the reasons that countries are doing biofuel programs? It's renewable source of energy, octane booster, fuel extender, or fuel substitute. Brazil has both of these values, so fuel extender and fuel substitute. Low carbon fuel, low pollution fuel, Kyoto and sustainable development. And what are the drivers? First of all, environmental concerns. So some countries support ethanol for environmental reasons. Other countries support ethanol to support farm incomes. And more countries are worried about energy security because of the high oil prices. So these three drivers can come alone or together, depending on the country we are talking. What are the best plants to do biofuels? The best plant to do ethanol in terms of the energy balances is sugarcane, has a 8.2 joules of energy produced per unit of fossil fuel input. Corn is much less effective than sugarcane. In biodiesel today, the plant that's considered more efficient is palm oil. And it's interesting to see that the two best plants are plants that comes from the tropical region of the world, sugarcane and palm oil. Of course, that this can be changed by technology and etc. But right now, if we compare the costs to produce ethanol from different sources, we can see that sugarcane have lower costs compared to corn and compared to beet and to cereals and other sources of ethanol in the world. Here are the big impacts that we have in some regions of the world. For example, today, almost 50% of the Brazilian sugarcane is used for ethanol. In US, already 20% of the corn. And if the projections of Professor Babcock are right, it will go to 30% or even 40%, I don't know. In Canada also it's important. In the European Union there is also a big program to use rapeseed to produce biodiesel. So it can have important impacts on agricultural markets. In most of the countries, biofuels are expanding through government interventions. Government intervention can come in 4 different ways. Tax exemptions in the production chain, compulsory blends, which is used in Brazil today, which will be used in Europe. In the US, it can be used one day. Today, you have compulsory blends in some states, but not nationally. And subsidies for producers or import protection from lower cost suppliers, which is used in the US today. So this type of different policy mechanisms can make biofuels viable in different regions of the world. Here is the situation of mandated or non-mandated use of biofuels. So you have here the US with 2% of use of ethanol compared to gasoline. Then you have the European Union with the 2% coming to 5.75% in 2010. China 10%. Brazil is the country with the most use of ethanol compared to the gasoline market. It's 23 right now. It can variate from 20 to 25% of ethanol in the gasoline. But there are many different projects today in the world, different ideas, but it's growing, and it's growing very fast. Let's see the markets. So the production and the markets. Today we have 12 billion. Today, no, in 2005, of course, numbers are changing very quickly. But in 2005, 72% of the production was controlled by Brazil and US. These are the two main countries today, and there are some differences here. In the US, 20% of the corn is used to ethanol. In Brazil, almost 50%. The yields are much more important when we compare the productivity of ethanol per acre, which is 320 gallons in US compared to more than 700 gallons per acre from sugarcane. In the US is 2%, in Brazil is 40%, and Brazil last year exported 800 million gallons, and the US imported 700 million gallons, and mostly because of the MTBE ban. I will show the figure right now. There's a protection of 54 cents per gallon in the US, which is approximately 39% ad valorem equivalent. and in Brazil is 0 right now. The ethanol markets are 1.5 billion gallons, 1.6 billion gallons, compared to the 12 billion gallons of production. So it's still a very small market. The first thing that you need to have a market for ethanol is standards. This is the first goal if we want to have a market. Right now there's no standards for ethanol. If you look at any other commodity, sugar, corn, you have very clear standards. In ethanol, not yet. This is probably the first thing that countries should cooperate. But it's a market where we see like it's very volatile. Destinations change very much, depend very much on the production. It's not only ethanol for cars, but also ethanol for other uses. It's very volatile. Brazil had a big expansion of exports last year, as you see here, directed to the United States. And the reason that Brazil had this expansion of exports, and we exported almost 1 billion gallons and more than almost 500 million gallons to the United States, was because of the MTBE ban in the United States. Here you see the U.S. imports last year from January to November. And most of these imports came from Brazil because of the opportunity that was created, and Professor Babcock showed exactly why Brazil exported ethanol last year to the United States. It will probably not continue to happen. But of course that this expansion of exports had also some impacts on the Brazilian market. So this is the situation in the US of MTBE and ethanol. MTBE going almost disappearing and the ethanol market increasing very much. So the Brazilian ethanol experience. We started our ethanol program on the 70s because of the oil crisis. The first phase in 75 was based on mandatory blends and subsidies from the government, so it was very subsidized program. And the second phase was based on fiscal incentives, tax exemptions, and the idea of having E100 fueled cars, so cars that moved only with ethanol. And at that time, in 78, 79, all gas stations in Brazil must obligatory sell ethanol. So this is one of the reasons that we have today a very big use of ethanol by flex fuel cars, because we have distribution of ethanol in all gas stations in the country. Then we had a big crisis in the 80s when oil prices went down and the production and the sales of cars moved only by ethanol went down rapidly on the 80s. In 2003, we started again to have flex fuel cars, have consumption of ethanol, high consumption because of the flex fuel vehicles. And so we had a big increase on consumption, internal consumption, due to the expansion of flex fuel vehicles in the country. Today we are expanding also our biodiesel program, but it's very small and very confusing compared to the ethanol experience. And the big question on ethanol is, are we going to have a market consolidation? Are we going to see expansion of production? What are the possibilities to do cellulosic ethanol in Brazil too, especially from the bagasse of the sugarcane? And are we going to have a global biofuel market in ethanol? Brazil, of course, have a big experience, as I told you. Sugarcane represents already 13% of the Brazilian energy matrix, which is quite incredible. And our renewable sources, if we consider also other sources like wood and hydroelectricity, represent in our case 44% of the energy matrix, and only sugarcane alone is 13%, which is quite impressive, and it's a big experience. The flex fuel vehicles in Brazil were introduced in March 2003. We have 7 brands, 49 models, and 33 gas stations in Brazil have at least one dedicated E100 pump. And today, more than 80% of the Brazilian light vehicles market sales are flex fuel cars. So it's very popular today in Brazil to use flex fuel cars. But the reason is not the vehicle technology, is the distribution of ethanol everywhere, which gives the consumer the choice to use gasoline, ethanol, or any combination between gasoline and ethanol, depending on relative prices. And relative price change very much in the country if we look different states of the country. So it can be more competitive or less competitive depending on the situation of oil prices and of sugarcane price. So the bigger question in the future is today the bagasse and the straw of the sugarcane is used to cogeneration of electricity in the sugar mills, and it can be used in the future as basic material for ethanol too. So where Brazil will expand production if we have an international market for ethanol? This is one of the big questions in Brazil. So what will happen if we have an international market, as we had last year in the United States, but it will not continue so easily. But if one day countries expand and if there is a big international market, where Brazil will increase production? And it's very interesting to see that in the Brazilian case, the impacts are much less important than in the U.S., because in U.S. any expansion of corn have big impacts on soy, have big impacts on feed to livestock and things like that. In Brazil, the expansion, first of all, as sugarcane is much more productive than corn, an expansion of sugarcane is not something that will change completely the Brazilian situation in agriculture. Right now we have 14 million acres of sugarcane in Brazil. Half of that is dedicated to ethanol, and we have 57 million acres of soybeans, 28 of corn, but sugarcane will not grow in the direction of corn and soybeans, but mostly in the direction of pastures. And in pastures we have 440 million acres of pastures in Brazil. So this is the main direction of the growth in Brazil. And having 440 million acres of pastures, there's enough space to grow sugarcane in Brazil. And this space is probably, and it's the most logic expansion is close to where the mills are today, because of logistics reasons. Because you know that Brazil don't have a very good situation of roads and rivers, etc. So the most probable scenario is that sugarcane will really grow very close to where the mills are today, in areas where we have degraded oranges or pastures. If we consider, for example, the target of 35 billion gallons of ethanol of the United States, to do that on sugarcane, which will not happen, but just to give you a number, we would need 46 million acres of sugarcane, which is 5 times more than what we have right now, no, more than 5 times. But it's not very much compared to the disponible area, available area of pastures in Brazil. Of course, at the Brazilian sugar areas, and I like to show that because there's lots of people saying that sugarcane will expand to the Amazon rainforest. We can see here that it's very far from the Amazon rainforest, and that region is not good to produce sugarcane in Brazil. There's no technology to produce sugarcane in the Amazon rainforest. Some people say that sugarcane will make soy or even beef move to the Amazon. But what we know is that the most likely scenario is that the expansion will be based on the increased land productivity in traditional areas, where we are going to move from extensive use of pastures, which was the model of the 70s, to an integrated system of livestock and agriculture for food, fuel, and feed. So it's a much more integrated system that we are going to see. For example, the possibility of planting sugarcane in traditional pastures area, but rotate sugarcane with soybeans, because sugarcane need to be renewed each 5 years, and it's possible plant soybeans, and this is good for sugarcane because it's very good for the soils. So this type of combination of different activities in the same region is probably what will happen in the Brazilian southeast and center-west region. Investments are raising in Brazil too. There are 77 new plants. We have 335 existing plants, and the amount of investments today is around $14 billion US. And 81% of the new plants are being built by traditional entrepreneurs of the sectors, and it is still a very nationalized sector. It's a very domestic sector. There are just a few international groups in this area in Brazil. It's completely different of soybeans, where industries are multinational companies. And here you see the main plants in Brazil today, and in the right side of the graph you have the plants in constructions, and you see that the plants in constructions are inside the same region where the traditional plants are. So they go to some neighbor states, but they are very close to the traditional regions. We started to see some foreign investors in Brazil. Most of them are European investors. There are 16 plants that will be international in 2012, 6%. But of course, there is big interest, including from other companies like Google or some systems, or many other groups are interested to invest in Brazil. But there are still it's a very domestic sector. It's still now in Brazil. These are the projections, of course, that probably the U.S. numbers here, as Professor Babcock showed, they will increase much more than I showed here in the first years. But they will come to 14 billion gallons probably in 2012, and they will stop that. But here I put also the projection for Brazil and from other regions, and we think that the ethanol production will reach 30 billion gallons in the world in 2012. And the biodiesel consumption is also growing very fast, especially in Europe. These projections from Europe are done by Töpfer, by Klaus Schumacher, and I think they are quite accurate in what can happen. So in both areas, ethanol and biodiesel, we have a big increase in the next years. In the US, probably much more than I thought in the first years. So this is what will happen. This is the projections we make in Brazil for production and consumption of ethanol. In Brazil, we think that we can reach 10 billion gallons in 2013, and consumption will reach 7.5 billion gallons, and exports can reach 2 billion gallons in 2012 in Brazil. And this is the U.S. situation. Professor Babcock made a very clear scenario for the U.S. case, and it's one thing that's interesting to consider in the U.S. is what will happen to CBI imports, the imports that enter the U.S. without paying the 54 cents per gallon, and what will be the perspectives for those imports. So to conclude the presentation, the Brazilian strategy for ethanol is used to be substitution and complementation of fossil fuels due to the compulsory blend, which was related to energy security, and to a growing demand related to adoption of flex fuel vehicles. And right now there's the possibility of exports, which is still going on. Brazil has an interest to see ethanol as a global commodity. However, and we know that it's difficult to assume a worldwide use of ethanol while supply is concentrated only in Brazil and US. Sugarcane is the most competitive raw material for the production of ethanol today, low costs, and a very positive energy balance. And the hydrolysis of cellulosic materials is the main driver of potential growth in global production in the future, and even there, sugarcane bagasse is also a very important material that can be used to produce ethanol. The US, we already have a very clear scenario from other speakers. And the conclusion about the Brazil-US partnership, we see right now 4 possibilities of partnership that probably the 2 commentators now will talk about that much and know much better than I. But what we see as good possibilities of effective partnership from Brazil and US, first of all, technical cooperation and common research projects in agriculture, industry, logistics, and applications. So we have here many areas from the chain, from the agri chain that could be object of specific partnerships between Brazil and US. And I think that logistics and, for example, vehicle technology or even biotechnology are areas where we could develop very interesting projects in the future. For example, on the biotech side, most of the varieties of sugarcane have been developed to produce sugar and not to produce ethanol. So we can really do lots of improvements in terms of the productivity of ethanol per hectare if we collaborate on that. The establishment of common international standards, the coordination and joint investments, private and public, and the worldwide common strategy, considering that these 2 countries represent 72% of the production today, which are the joint efforts to promote new players in other countries, the development of international markets, and market access. So these are the main points, and the position of the Brazilian sugar industry today is not to replace domestic production through the elimination of the tariff in the short term, because even we don't have enough production to enter the US, but it's to complement the US ethanol industry or displace oil imports through an effective partnership. So thank you very much.
Thank you, Marcos. The last phrase he put there comes from a presentation that the president of UNICA, which is the Association of the Ethanol Producers, Sugarcane Industry in Brazil, had in Congress, the U.S. Senate last June, and we had some copies of that. The author is Eduardo de Carvalho. And if there aren't no more copies, you ask us and we'll send it to you. Now, another thing that 3 presenters mentioned, this meeting marks to us, and we had meetings this morning, is the beginning of an effort. The cooperation has started, and they are going to map out a major research project to go deeper into all of this, Brazil, US, and the European Union. So the cooperation has started at the academic level. We know that the 2 governments are thinking about that, and we would like now to hear from representatives of the U.S. and the Brazilian government, starting with Greg Manuel from the State Department.
Good afternoon. I want to take a little bit of time today to talk about several things. First, I want to give a little bit of an overview conceptually of what the State Department is doing on energy issues, and then focus, of course, on why we're all here today, which is the U.S.-Brazil partnership, which we've begun to speak a little bit about in a trip that I was on with Nicholas Burns and Assistant Secretary Tom Shannon just over a week ago in Brazil. As far as the State Department is concerned, over the last year or so, there has been a newfound sort of attention and focus on energy issues. So much so that Secretary Rice has undergone a number of changes organizationally to reflect the importance of energy to our foreign policy agenda. The range of sort of interrelationships between energy and foreign policy are expansive, hitting on everything from our geopolitical interests, our economic objectives, and of course the environmental and health agenda that we help steer as well. The shape of the table on energy issues is changing. Not only is the State Department taking a real role in focusing on this in ways that have never been done before, in really leading on key efforts, including the U.S.-Brazil work, which I'll talk a little bit about later. But it is also shaping changing the shape of the table in that we are undergoing a number of other changes in terms of how we focus our work in relationship to what else is going out in what other efforts are going on in the rest of the world. The conversations that I have daily include some of the top scientists and engineers to get a better sense of where the frontiers of opportunity and possibility are. They also include, of course, the policymakers, both inside the State Department, but also involving a lot of the NGO community, many of whom I see in this audience, and also the private sector. My background is in the private sector. The private sector is where the capital is. It's where the management talent exists to bring to the fore the solutions that will make a difference. If it's not private sector related, or at least, or in ideally driven, then you are often focusing on policies that won't have the traction that they deserve. So is that three-legged stool of private sector, science, and policy, which I'm very focused on in changing the relationship between what the State Department does and thinks about on energy issues and the policies that come out of the Secretary's office and how we move our agenda forward. Second is, where are we focusing our efforts? There are really three broad areas. One is on supply. We're looking to increase the production of conventional and alternative energy supplies, as well as the sources of those supplies, and protecting the energy infrastructure that exists and is, of course, quite vulnerable. The second is managing energy demand growth, keeping in mind that the majority of energy demand growth is originating from the developing world, not from the developed world. So any solution that we need to focus on needs to tailor to that reality. India and China are the real two sort of white elephants, if you will, in the room when you're talking about energy demand growth. So policies that orient the State Department and the world towards finding more equitable solutions need to involve India and China and the developed world in ways that we've really, frankly, never done before. And thirdly is technology. It's an area of major comparative advantage for the United States, in the case of biofuels, for Brazil as well, and of course an area of real focus for our president. And the research and development agenda, the numbers, both in absolute amounts and relatively, have increased substantially over the last several years and are very sizable. So that, in addition to the deepest and most sophisticated private sector in the world, are leading to sort of a nexus of opportunity between public and private in transforming really what is the largest industry in the world, the energy industry. I really believe that we're at an inflection point right now. We're at an inflection point in policies. This stuff is complicated. I mean, we're talking about energy conversion statistics. We're talking about ag policies. We're talking about energy policies. There are about 7 or 8 dimensions to this conversation. So it takes time. It takes time for the legislatures, for the policymakers to get their arms and minds around all of this. And technology is changing all the time. So it's the challenge is partly the discussion and making sure that all the right ideas and the right questions are asked. And it's also the translation of science and policy and private sector. So we're talking about return on investments, we're talking about energy conversion statistics, and we're talking about legislation all at once. That's the only way to have this conversation intelligently, and it's one that we are beginning to have in earnest across the U.S. government. My office, which was just created several months ago, is focused on 2 things. One is coordination both in the State Department and across the interagency. And there I'm looking at across all of our international energy activities, getting a better sense of what our resources are, what the impacts of our various initiatives are in meeting that supply, demand, and sort of technology strategy that we talked about. The second is the role of incubator. I come from the venture capital sort of small company background. I also worked as an investment banker at JP Morgan. I was involved in starting and managing 2 small companies, and also spent a little bit of time in the venture space. It's interesting to me that this is actually not all that different. I mean, there's very little upside, but the on an equity level, but there's enormous upside socially, and this is one of those, I think, unique opportunities where there's so much that is converging, that the nature of the discussion, and biofuels, I think, is the perfect focal point from which we can have a real discussion about this convergence, where we are seeing for the first time transformative opportunities, not incremental, but transformative change in the energy space. And to my colleague Bruce, who mentioned earlier, when you're talking about the winners and losers, the answer to that is, of course, very complicated, and we could spend an hour and a half just on that issue. But look at the drivers. You're dealing with an increasing size of the energy production supply, meaning that there are other things out there than oil, and that is enlarging the market. The second is that the participants in an asset-intensive industry, the energy industry, are becoming much more numerous because the capital costs of getting involved in energy are in the biofuel space are significantly less than ever have before. So you have smaller groups of capitalized, farmers, farming collectives, entrepreneurs getting involved, whether it's on the technology itself, whether it's owning processing facility. It's really incredible going to Brazil, the U.S., and frankly abroad to see the beginning of this activity. And frankly, we're really just at the very beginning. So, U.S.-Brazil. Clearly, this is an issue of real interest in this room. As you probably will guess, I will keep my comments on this to be quite general. This is an issue for President Bush and President Lula to discuss and formally announce to the public. But suffice it to say, for the last 6 months, the United States has been in discussions with Brazil on a number of issues related to furthering cooperation on biofuels. I have been myself to Brazil about half a dozen times already, and we have an extraordinary amount of interest on their side and on ours to really move our comparative advantages, being the 2 largest producers and collectively having more than 70% of global market share, and bringing the collective insights, talent, know-how, private sector competencies, and technical capability, not only to further this industry for the U.S. and Brazil, but for the benefit of others. So our areas of cooperation are generally being outlined and have not been determined or decided upon as of yet. But one could expect that there are more or less 3 areas. And to my, is it Mark? To Mark's point earlier, I think that he will be pleasantly surprised that our areas of focus indeed mirror quite well to the 4 areas that he discussed. The first of which is deepening cooperation on research and development itself. There's been a lot of discussion here that this is the game changer. It absolutely is. One thing that I would mention in some of the forecasts that were talked about before is that notice, and I know Bruce mentioned this later, that technology change was not part of that forecast, and that let's just say that I am extremely excited about what's happening on the energy front right now. I spend a lot of my time in Silicon Valley and with the venture capitalists, what's going on both here and in Brazil. Everything in the value chain from cellulosic processing to feedstock yields that are going to be 30-50% higher than what they are today in the near future. and new energy crops that are being biologically engineered. There is so much work and so much ingenuity behind all parts of the biofuels value chain that it's quite compelling where we're going and how fast we're going to be getting there. But R&D, nonetheless, especially in basic research, as opposed to applied, has a greater role to play in both Brazil and the U.S.'s future, and that is something that we're looking at very much at this point. The second area is bringing these transformational benefits of biofuels to other countries. It's been talked about a little bit already, but the economic opportunity for a great many producers and a great many more energy producers than is currently benefiting from energy in the energy industry is enormous. The labor intensity of biofuels is an enormous social benefit to a lot of these countries. The environmental benefits, if managed properly, are also very, very compelling. I mean, Wells to Wheels analysis suggests that everything from the production, harvesting, distribution, and use of ethanol is somewhere between 14 to 40% better than gasoline consumption, and that's without cellulosic. Cellulosic will bring that to about 2.5 times that benefit. So there's a lot on the table here. There's also counter-narcotics benefits by having a high-value product that farmers could turn to. There's the benefit of steering foreign direct investment to these countries that begin to participate in this, accelerating the rate of job growth and infrastructure investment, et cetera. There are all these issues sort of converge to create a very compelling value proposition for these countries. The third is something that Mark also mentioned, is the importance of growing the market itself. And while tariff issues are not on the table, I repeat, not on the table, there is enormous benefit to creating the standards and codes environment, to creating of biofuels a global commodity for the future. So between research and development, between bringing the benefits of biofuels to third countries, and then of course growing the market itself through standards and codes work, which is so important. So we avoid some of the difficulties of having different standards like we have had in the appliance sector and elsewhere, which has enormous costs to the industry and to consumers. We have a nascent industry that is growing quickly and ripe for sort of a uniform or sort of harmonized standards and codes in the near future. So with that, I wanted to yield some time to my Brazilian colleague, who will, I think, echo some of the same areas of work that I have, and then more than happy to take questions.
Thank you, Greg. Just one final before we move to Emerson remarks. I failed to mention, I wanted to let you know that the energy effort in all areas at the Wilson Center is being coordinated by my colleague Kent Hughes from the Science, Technology, and the Global Economy program, and he is also, that program is a co-sponsor of this meeting. Now we will hear then from Emerson Close from the Brazilian Embassy.
Thank you, and good afternoon to all. Well, there's a few things to say after these highlighting presentations. Well, as far as Brazil is concerned in terms of the energy issue, we also, as the U.S., have in the Foreign Service restructured our ministry to better coordinate the actions of the Brazilian side towards the challenges posed by the energy issues worldwide. In that regard, last year, our minister decided to create a new department, which is the Energy Department within the structure of the Foreign Ministry. and this department will be responsible for coordination among the Brazilian agencies involved in the energy area. As well, the Office of the Chief of Staff in Brazil also created a coordinating agency within that office that will be responsible for the overall coordination within the Brazilian government. So with regard to the requests of cooperation that we receive from other countries, mainly developing countries, given our experience in the ethanol field, there was this need of creating some sort of coordination, better coordination within the Brazilian government. So this initiative also reflects the importance Brazilian gives to the international cooperation on the energy area. We've engaged with discussions, as my colleague Red said, we've engaged with discussions with the U.S. side with regard to possible areas of cooperation. These areas have been already mentioned. I want to go through this in sake of saving time, but the idea is to involve not only the government but also the private sector in initiatives to expand the production and consumption of ethanol and other biofuels like biodiesel, which is important for Brazil in terms of its social benefits, to expand this production and consumption worldwide. We think that only with a truly international market for biofuels we'll have the necessary conditions for developing and expanding our own internal markets and increase the participation of biofuels in our energy matrix. So in that regard, we are working on a plan for developing international standards for biofuels. The idea, we think we're going to start with the ethanol and move on to the other biofuels. But the idea is just that, to have a common standard so as the ethanol can be easily traded internationally. Well, this initiative is also part of our broader strategy to bring some sort of development alternatives to poor countries. We see that the ethanol experience in Brazil has provided a good source of income for rural populations, and it is a source of rural development. If you see the development of ethanol industry in Brazil, we have not only the production is mainly concentrated in the southeast, mainly in São Paulo, but also we have producers in the northeast, which is an area that is underdeveloped if compared to the other parts of Brazil. So the ethanol industry have provided an alternative for the development of these regions. And this is also seen in terms of the biodiesel experience. Although it is in its initial phase, the biodiesel has proven to be a good source of income for rural population. We have this alternative crops, as you call, for the production of biodiesel made in the castor beans and palm oil that are produced in the northeast of Brazil. So this will give an alternative source of income for this population. And that kind of experience we are trying to replicate in other countries, mainly in Latin America and Africa. Besides the partnership we have with the U.S., we are now engaging in discussions with partners in South Africa and India through our common dialogue forum with these countries, and the biofuels area is one of the areas of utmost importance for us in terms of cooperation with these countries. We also have a long partnership with some countries in the Caribbean region, and in provide them with the technology to develop their own ethanol industries. So this is part of this South-South cooperation we are trying to push, and it's one of the priorities in the presidential agenda. So in that regard, we think that this exchange of visits between our two presidents, President Bush coming to Brazil and President Lula coming to the U.S., will provide another opportunity for the two sides to engage in talks and improve this dialogue we are trying to expand. I remember when I arrived here last year. It was 2 weeks after the State of the Union address, when President Bush gave this made public his intention to improve the ethanol production and consumption in the U.S. So our embassy was kind of dumped with phone calls and requests for information about the ethanol industry in Brazil. So that this is a hint of how important the issue has become here and worldwide. All this dialogue and this change in structures in the bureaucracies just show that the ethanol and biofuels have reached a top level at the political agendas in both countries. So I think that with that I'll end my initial comments, and I'll have the pleasure to answer any questions you may have. Thank you very much.
Well, if you have questions now, we have Kristen, I think Sarah is over there, and they will help us. We have questions on, first question, Howard Viarda, CSIS.
Howard Viarda from CSIS. My question is for Professor Babcock. It was striking that both of you Midwesterners spoke only of corn production in Indiana and Iowa, and I'd like to ask you, perhaps naively, about sugarcane production in Florida and Louisiana and Texas, and is that a viable possibility? All right, end of question.
Okay, I'd be happy to talk to you about...
Could I ask a second one as well? And that is, since Brazil's technology in this area and infrastructure is so well developed and the science is so good as compared with ours historically, why not just import ethanol from Brazil instead of going through all of this agony that we will go through to shift over to ethanol?
Sure. Let me take the easy question first. As long as we keep the price of U.S. sugar double the world price of sugar, there's no sugar producer in the United States that would ever devote their sugar production to the production of ethanol. So when you can figure out a solution to the U.S. sugar program, and it's been the bane of economists forever, we just don't understand how it can be so... the benefits of intervention can be so concentrated on such a few individuals in the United States. When you solve that problem, then we can start talking about the economics of producing sugarcane and ethanol out of sugarcane in the United States. It is feasible to do, but you have to change U.S. sugar policy. The second question is, it was striking to look at the beginning of sugar production for ethanol in Brazil and the beginnings of corn-based ethanol production, they both occurred in the 1970s, the initial kind of investments that came on. And so you really have to look at the public policy issues that were involved, which was in some sense, is there an alternative to oil? So I think both countries have shown that there is an alternative. One is a starch base, one's that then gets converted to sugar, and one's a sugar base. And it's more of a domestic policy. In both countries, it's not economics that's driving it; it's domestic policy concerns. So then you ask the question, well, why don't we just import it all from Brazil? Part of, I think, the regardless of the domestic policy agenda of Iowa corn and the Iowa corn lobby, if you will, that has driven this, and ADM, which is a private company that has driven the subsidies in the United States. Regardless of that, it seems like what we're doing is learning by doing, and we've done it. And what I mean by that is we've greatly enhanced our ability to convert corn to ethanol in terms of efficiency, in terms of transportation infrastructure, and all of those things. We've done it, and so the economics of ethanol in the United States now is far better than it was 10 years ago in terms of infrastructure and in terms of knowledge of how to do this. So, there's other concerns, reasons other than just saying, okay, we want ethanol, let's import it from Brazil. Number one, they don't have the ethanol to export to us. Number two, we've learned a whole lot by doing in the United States.
Yeah, we had questions on this side here. Sarah, could you? Yes.
Thank you. Gary Blumenthal, excellent panel. I have questions for everybody, but I guess I'll conserve time and just ask my friend Marcos. I want to take advantage of the fact that you run the International Trade Negotiation Center to ask two questions. One, what is your perspective in terms of biofuel subsidies and its implications for the WTO? And I note you use the term energy security, which is not a WTO term, instead of national security. You get ethanol that is an agricultural product, but biodiesel, which is an industrial product. And a second question, different panelists have mentioned an international standard. Is that out of a concern that a technical barrier will develop in ethanol, much as Europe has done in biodiesel?
Let me first tell you that on the comments made by Bruce, I think that Brazil, it's interesting because we started our projects at the same time with lots of government intervention, but it's important to say that Brazil in the 90s, Brazil deregulated the sugar industry. And today the level of government intervention is much, much lower than it used to be. And this deregulation of the sugar industry was extremely important for the reduction of costs that we saw in Brazil, which makes today the Brazilian ethanol a very competitive commodity. But I understand that we cannot liberate the U.S. markets suddenly, and you said that market access is not on the table right now. But we should put market access on the table in the long term, because there's no reason for the fossil market to be completely liberated in the world and the biofuels market be, you see, with so much tariff protection and non-tariff protection. So this is your question. So what will happen in the long term? Right now, we are not worried about subsidies and protections in the biofuels market, because we think that the only way to create a biofuels market is through some government intervention in the countries. If the biofuels market is concentrated only in 2 regions in the world, it's very difficult to see an alternative. So we think that right now the best thing that we can do is to convince countries to use green box subsidies for ethanol, especially on the research side, trying to find a solution for things, important things like global warming, like less dependence on fossil fuels, etc. So that's what we'd like to see. And right now, what we are worried on the trade policy side is on the conclusion of the Doha round, which we already have many things to to deal with. And one of the things that we are worried specifically on the Doha round is some kind of reform on the sugar system in the U.S. as we saw in Europe, because Europe had a big modification of the sugar system. Of course, that's not exactly what everybody expected, but we saw some reform, and I think that this question that you made was very important. Is why don't produce ethanol from sugarcane in the U.S.? Because there is very high tariff protection on sugar. Just to tell you that market access for us is an issue, but it's a long-term issue that countries should think, and not only Brazil and U.S., but globally. And there's opportunities for many developing countries in this area, because if you look, for example, biofuels, biodiesel, you come to palm oil and you have the big opportunity in equatorial regions of the world. So I think that we should put that in the agenda, even if it's not a short-term issue. And just to conclude what you asked, biofuels, we are following the policy. There are a few studies about that. I think the IPC just did a study, the international, the Global Subsidies Initiative from IIST also did another study to compare government intervention in the world and to show how distortive they are. But right now, we are not really focusing on that.
Yes, I think there was another question here.
Hi, my name is Jorge Gomez, Applied Research Center, Florida International University. We've been looking at biofuels for a while. Obviously, we're not from a corn state, but we have plenty of biomass. So cellulose is really what we're looking at. So you're going to hear a lot from us in the future. This question is actually for both of you, Dr. Babcock and Zhang. You've been talking a lot about the positive sides of biofuels, but there are also a lot of risks. And one of the issues that I think was overlooked a little bit by Dr. Babcock is the same issue for corn that you mentioned, crowding out the supply of corn, can happen to soybean as well. That is also the main source for biodiesel in this country, at least, and will